the whole excitement about agents is very consistently in the Bloomberg BCG radar across all geographies.
We believe that AI agents are going to be an important next step of evolution of functionality and also impact potentially for the companies that really adopt it in a productive way.
The CEO Radar is meant to be a tool for CEOs to compare their own agendas to those of their peers, as well as the market as a whole. To do so, it took a look at the topics that were discussed on almost 4,700 earnings calls in the fourth quarter of 2024. I'm Edward Adams of Bloomberg Media Studios. On this first episode of the CEO Radar podcast, to unpack the topics behind the numbers, I'm joined by Christoph Schweitzer, CEO of BCG, and by Judith Wallenstein, who heads the firm's CEO advisory practice. Between them, they speak one-on-one to more than 600 CEOs in the course of a given year. Let's begin with AI. It's clearly still a top 10 topic for CEOs, and we certainly saw a huge increase in the number of mentions of it when ChatGPT was released in 2022. However, in 2024, we did see the number of mentions begin to plateau. And in fact, there was about a 7% dip in the number of mentions of AI and machine learning in the fourth quarter of last year. So while it remains a big topic, it seems as if something is afoot here. Something is changing in the way that it's being deployed in companies. What are you hearing from the CEOs that you speak to about it?
Overall, it's about 3/4 of company leaders say AI is a top strategic priority for them, but only about 1/4 feels that they are seeing the value that they were hoping to see. So there's a meaningful gap between ambition and reality. And I do think what that induces is you're just a bit more careful in your earnings call as you talk about it. I think that's what the numbers suggest.
Judith, we've seen some regional differences in terms of the mentions of AI and machine learning. It's held relatively constant in North America. It's actually gone up in Asia, but it's been down significantly in Europe. It was mentioned 39% less in quarter four than in quarter three. What do you make of that?
In general, we do see some topics that are fairly consistent. The whole struggle and challenge to move from the proliferation of use cases to real impactful programs is something we hear from European CEOs in the same way we hear it in other parts of the world.
It's an interesting window because companies are now, in our observation, separating into those that are real winners in the AI space and others that are laggards and struggle to get the value out of it. The winners, for sure, are a lot more focused. They don't have 1,000 flowers bloom. They have fewer use cases, fewer functions that they focus on. They invest significant money in a really focused and concentrated way. And very importantly, they double down on upskilling their organization, on upskilling their teams, so that they change the way they really work in every single day. And then they measure it in a quite systematic way, operationally and financially. That's what separates the winners from those that are lagging.
Probably 3 data points why I think the topic remains as high on the agenda. One is the whole excitement about agents is very consistently in the Bloomberg BCG radar across all geographies. Mm-hmm. The second one, if you look at the companies that have upskilled more than 25% of their workforce on AI, there's Japan and Singapore very much on the top. But then actually you have a number of European markets where these companies are headquartered before even you have the US. And European CEOs who were surveyed on their willingness to invest find themselves pretty much in the same ballpark range than other markets that are ready to invest. What is more pronounced is the insecurity on regulation. And in a continent that's a lot more, where policymaking and regulation are more prominent and visible, you actually see that CEOs say, look, I have no idea what to expect of this, like the EU AI Act, and how as a company we're going to navigate.
My anticipation for 2025 is that we are actually going to see quite some bifurcation. I think there will be fantastic success stories. We are starting to see some of those, for example, in biopharma research and development. We see it in some of the coding for big software companies, but also for banks and insurance companies and similar. We also see some great examples in field services. We see great example in customer service and kind of customer interaction management of all sorts. So there are some great success stories emerging. But it turns out it is harder than many CEOs thought when they went on stage in their earnings call a year or 18 months ago and made big promises.
So You mentioned AI agents, which is something that we saw an uptick in mentions of this quarter. I think in Q3, there were about 24 mentions of agents globally, hardly on the radar at all. And this past quarter, there were 105. Is that sort of the new flavor of the month for AI? Is AI agents going to be what we'll be talking about in 2025?
Well, we believe that AI agents are going to be an important next step of evolution of functionality and also impact potentially for the companies that really adopt it in a productive way. So it's going to be sizable. However, it's also still very early days, and I think it's important to calibrate. And we have about more than 100 mentions of AI agents, but we have about 1,400 mentions of AI. So it's kind of the next thing. We believe in the potential. We expect that you will hear it more frequently mentioned in 2025 earnings releases. But between that and the substance in the P&L, I think there's quite a bridge to cross.
A lot of companies in recent years have been saying that AI is not going to be a job killer, that it's going to be something that changes the way in which a lot of people work, but it's not going to eliminate positions in their enterprises. I'm curious what your view on that is.
Well, our observation is in line with what you just said. There are not many companies. In fact, there are less than 10% of companies where AI deployment has led to redundancies and people being let go. In fact, it's a bit kind of the classical pattern, right? I mean, 10, 20 years ago, we were all speculating that digital and the iPhone and similar devices would completely make parts of the workforce obsolete. And that has not happened. In fact, it has created entire new industries, new functions, new things.
Let's turn to these new agendas that CEOs are facing. As you guys know, the radar found that CEO mentions of environmental topics such as climate exposure or greenhouse gas emission targets, and ESG topics as well, like board independence and diversity. All four of those topics declined in Q4. And that's really a continuation of a decline that they have been seeing in recent quarters in prior years. What do you think explains those declines, Judith?
I think, Ed, you saw that high watermark of talking about climate emissions, companies' climate targets in 2020, and it has declined ever since. If we reflect what we hear from CEOs, you frankly have the full spectrum. You have those who say, thank God, I mean, my board's letting me off the hook on this climate thing now. And you have those who actually feel in a moment where the topic might have less public attention, it's a fantastic moment to double down and invest to outcompete in the long term, specifically in those areas in the energy transition where CEOs feel they can invest in technologies where scarcity will prevail in the mid to long term and where they will be better positioned. You also see that in the radar. You see that mentions of individual green technologies go up, such as clean hydrogen, by actually quite a margin in all regions. You also see that climate risks and natural hazards are one of the topics that have risen to the top, actually grown by more than 110%. Probably not a big surprise, 80% of these mentions come from US CEOs who also have seen the highest number of basically natural hazards and weather phenomena happening in the past year that have created damages of $1 billion plus in each and every case.
My observation in line with what Judith said is that within the companies, there is still largely a commitment to inclusion. There's a commitment to managing climate risk, to decarbonizing and setting up the company for the future. And so I do think substantively CEOs and companies are continuing to steer in that direction, but they do it in a much more selective, in a more calibrated, and certainly in a much less vocal way. It's one of the topics where I think substantively behind doors, there's a lot more action, a lot more commitment, as you also describe, Judith, than you hear in the earnings calls.
As environmental and cultural issues have declined in importance, trade and taxes have seemed to have taken their place, right? There were over 40 national elections last year around the globe. And generally, if you were a challenger and you were focused on economics, you won the day in those elections. CEOs mentioned supply chain shifts and tax policy. Those mentions rose by almost double digits in Q4. But oddly, CEOs talked less about tariffs, which we know is going to be a huge topic this year. They spoke about it 16% less than they did in Q3, whereas the analysts spoke about it 100% more than they did in Q3. Christoph, what's going on there?
I think the analysts understand that there will be meaningful impact on the P&L of major multinational companies, and they are starting to model that and put it in kind of their assessment of the quality and rating of companies. I think CEOs are staring at tariffs and they know something is going to happen, and they watch as kind of Q1 evolves, how it will impact their business, and then they're going to talk about it. I expect they will talk a lot about it in 2025. But I mean, what could you say in 2024? You were waiting in anticipation of what the first quarter would bring, and now here we are, right?
When we look forward to 2025, one of the things that you were mentioning before we began taping was a rise in M&A activity, and certainly discussion about that on these calls. What's driving that? What's behind the increase that you expect to see come the first quarter of this year?
Well, our own work at the moment as BCG tells us that there will be meaningfully more M&A in 2025. It's not a topic that you talk about in your earnings call until it happens, right? Neither if you're an acquirer nor if you're potentially a target, you talk about this until the moment when it happens. But fundamentally, we do believe there are some very important factors that are going to drive activity. First of all, we had a number of relatively low M&A years. There's pent-up demand. Number two, we expect that private equity is going to put some of its dry powder to work in 2025, but also private equity are going to exit some of the assets that they've been holding longer than they anticipated. Third, there will presumably be some moderation of interest rates. In fact, there has been a decline in interest rates in important parts of the world, a bit less in the US than people would have thought last year. For sure, but I mean, the trend is the trend. And lastly, I think many companies do anticipate that the regulatory environment from an antitrust perspective is going to be easier to navigate. And you take those factors together, we expect there will be meaningful M&A, and not only acquisition, but also carve out of business units and divisions in 2025. For sure, it's one of the topics where we feel the demand that we experience as BCG is ahead of what they talk about in the earnings calls.
Judith, when you think about the way in which CEO roles have been changing in recent years, what's your sense as to the way CEOs should sort of approach their task in 2025? If you had to give them a sort of 30,000-foot look at the way in which they should do things perhaps differently in the coming months than they have in prior months, what would be your recommendation for that?
If you look at the last years, I think CEOs have gone through these waves of deciding where to take positions, right? In a much more divided, polarized world, often with very passionate workforces that literally wanted their CEO to take positions on everything from a local community issue to political turmoil in the world. And a lot of CEOs have done so because they felt this is what it meant to have the back of their organization. And I think most of them have realized that's a very, very slippery slope. It's very difficult because that could keep you busy the entire day. It also exposes your business quite a bit. And I think most of them have gone back to say, how do I strike that subtle balance of empathizing with my workforce, where people live the exposure to hate speech, political division a lot more every single day? How are you the great unifier, in a way, internally, where you promote the values of the company, civil dialogue, the need to really exchange and listen to each other while not taking positions on everything and anything? And I think that's a very fine line. I think it's also a really noble task because if in a more chaotic, more insecure world, you can provide purpose and direction to your organization. And if you can give them the feeling that in a world where they often feel powerless, they can contribute and have impact on something that matters for the company, for the community, and to larger society in the end, I think that really mobilizes an organization and that gives everyone a place to rally around.
It's an interesting notion that they function as a unifier in chief in a very divisive time. I mean, I think it's clear that we're at an inflection point here. We're not just changing years, we're not just changing quarters, but business is headed in some kind of a different direction. Clearly, 2025 and beyond, these topics are going to be playing out in some very, very interesting ways. I want to thank you both for your insights today. For those of you who would like to explore the CEO Radar in greater depth, you can see the entire report at bloomberg.com/CEO Radar. If you like what you hear, we recommend that you subscribe on YouTube or the podcast platform of your choice to get our second episode which will drop in early Q2 with an entirely new batch of data. I'm Edward Adams. On behalf of BCG and Bloomberg Media Studios, thanks for listening.